theory is only one of three theories of banking. And it's extraordinary. I mean, banking has been around for 5,000 years. You go back to ancient Babylonia, and there were essentially modern banks. There was a credit economy. There was interest being charged. There were collateralized loans, uncollateralized loans, cashless transactions. You know, it was a proper banking system, because essentially banking is accounting, and they kept good records, and we have them in the British Museum, thousands and thousands of clay tablets, right, in cuneiform, where they note, and they're mostly accounting records and banking records. So banking is ancient, yet until recently, there's been a debate, still an ongoing debate, a controversial debate about how banks actually work. And there's these three theories of banking. Now, the one that I described is the dominant one, the conventional one that's in all the textbooks and finance journal of finance, and so on, journal of money, credit, and banking. They think banks are financial intermediaries. This is not based on empirical evidence, by the way. Now, there's a second theory, and that's the older one. And some people remember, because that used to be taught in the textbooks, also in economics, namely the fractional reserve theory of banking, which says that, a bank always has to put a percentage of their deposits with the central bank, the fractional reserve, and let's say if it's 1%, the bank gets a new deposit of $100. It will put $1 with the central bank and lend out 99, but the 99 will then become some other bank's new deposit when you use it. And that bank will then put 1% aside, give it to the central bank as a reserve, and lend out 99% of that, 98 point, and so on. So the whole thing continues. That will then become some other bank's deposit. Each time the amount gets smaller, and it's a geometric progression, and mathematically, and you can calculate the total. And with a 1% reserve requirement, the 100 initial deposit become 10,000 in aggregate in total deposits. The central bank has 100 as their total reserves from all the banks, these small amounts, and total new lending in the banking system is 9,900. That's the fractional reserve theory.